What's going, guys? Today's Thursday, and I'm finally back from my trip. So today is going to be a super duper long news day. Just to let you guys know, I'm not sure how long this is going to be going on for. Right now, it's about 8:30. Hopefully, I can finish this before market open. By the way, let's talk about some of the things that actually happened when I was away. So first of all, let's talk a little bit about the whole crypto sphere. Okay, I actually recorded a video when I was in Thailand when I was on my vacation. I actually talked a little bit more about how you should not really worry about how the market was actually pumping so much because I was getting 14%, 20% on the intraday trades, and I was just getting $3,000, $5,000 a day on my trading account. As good as that was, I actually recorded a video saying that nothing actually changed in terms of our macro thesis on the actual market itself. Okay, recessionary trends is still there. Okay. If you want, you can check out my latest video, which is the video before, basically stating out the catalyst that I do have for the market recession that might be coming very soon. Okay, so in that video, basically, I said about all the things that personally what I am concerned about in the market. So if you're interested in that, you can basically go over to check it out for more context on what I actually said on that video. Anyway, so like I said before, I do think that as much as stocks were going up, crypto was trying to recover. Okay, at the end of the day, the macro thesis did not change. So of course, you might have a few buy the dip. You might have a few people who think that oh, the sell-off has really been too over leveraged to the point where I think it's better for us to start to buy in on the dip and things like that. I do understand some of the people's mindset around it, and I can see why you might think that it will make a lot of sense for you to really buy back into some of the companies that you do like. However, I do feel that to a certain extent, it's kind of like catching a falling knife to a certain extent. And I'm not saying that the companies that any of us are going to buy into are going to be bad companies. Okay, I don't think that Tesla is going to be a bad company. I don't think your Palantir, your Snapchat, your Twitter. Okay, Twitter's a bad company, but any other companies out there, I don't think that those are actually bad companies. I just think that since you're thinking about buying in on dip, you should not buy in on green days. Okay, the thing is that buying in on green days, thinking that oh, a recovery is going to come right in after 2 green days, is a huge mistake, because there's a lot of time where people like myself start selling off a bit of our stocks and also start selling calls. And that was what I did even when I was on vacation. I actually sold a few calls on some of my bigger positions, and I actually made a lot of money on those as well. So basically, my vacation got paid off from those sold calls, which I'm very, very happy about. And of course, afterwards, I also did buy more Occidental Petroleum puts, which I'm very, very happy about that play, because Occidental Petroleum kind of just went down a little bit on price. And right now, if I'm actually looking at the hypothetical price for Occidental Petroleum puts, I'm looking at making about $700 on the Occidental Petroleum puts that I bought 2 days ago. So very, very happy about that. Hopefully that's going to be working out for myself. All right. So anyway, let's move on to some of the news that we probably did miss out on. First of all, we have to go through with the consumer earnings. This is a huge one for us. Okay, your Target, your Walmart earnings, and finally we finally see how inflation is so detrimental to all of your consumer discretionary. Okay, Target was down, Walmart was down, your Costco was down. All those who companies who are basically the forefront of what is actually needed in a retail consumer discretionary showed bad earnings, and a lot of them actually showed rising costs, and purely from an inflation point of view. This definitely scare a lot of people away from those stocks, okay, because of higher wages, higher inflation, higher fuel costs, higher basically everything, operational costs, rental, everything is going up in price. However, they are unable to raise their price up high enough, because if they do so, that's going to be causing a whole wage price spiral all over again. And that's kind of what we are trying our best not to do. So that aside, that kind of basically caused one of the worst sell-off since 2020. And of course, 2020 did not sound like too far away. But let's be honest, we're talking about the March of 2020 when Dow Jones lost more than 1,000 points. And just yesterday, Dow Jones lost 1,100 points and more. Of course, with the S&P dropping 4%. The S&P dropped 4% yesterday, and also with the QQQ, which is the Nasdaq, dropping close to 5% intraday. So, of course, yesterday was a horrible market. And I was kind of happy with yesterday's market simply because I did have my sold calls on it. So yesterday I basically lost about, I think 0.4%. Everything else basically just add up on its own. So I'm not really that worried. However, I would be closing off some of those calls simply because I do expect some of the price to rebound a little bit. It's due to how people usually like to trade in and out of this sort of huge volatility stock market. All right, anyway, let's move on to the next one. Melvin Capital to close funds, return cash to investors. So I'm pretty sure everyone kind of know about Melvin Capital. Okay, Melvin Capital was one of the most important names that we actually heard of back in the GME AMC saga. One of the hedge funds that was actually shorting GameStop till no end. They even went to a further distance to even borrow money, borrow capital to continue to short GME and AMC. So finally, over here they say that Melvin Capital plans to close its funds and return the cash to its investors, capping a stunning reversal for a firm that lost big on the surge in meme stock last year and on wager on growth stock this year. So for people who don't know what happened with Melvin Capital after the whole AMC struggle, afterwards they invested into, I think they invested into DraftKings, and then that went down, and then afterwards they invested into some growth stock that basically went bust as well. I'm not sure if they actually will show you guys what they actually did over in this side. Let's see. We drew the plans. Okay, yeah, actually they didn't say that, but anyway, I've worked tirelessly for 20 years to try to be the best I could and to build and lead an exceptional team of professionals. Being a steward of your capital requires an unrelenting focus. I'm proud of what our team have accomplished since 2007. So yeah, basically he's going to be returning all of his clients' money by late July. And yeah, as of April, he is Melvin Capital managed $7.8 billion. So yeah, finally closing down on their hedge fund. Not sure if that's a good or bad thing. But anyway, let's move on to the next one. Dow slides more than 1,100 points in worst day since 2020, which is the news that I was talking to you guys about earlier. And I do think that that's mostly due to the retailers. Okay, major retailers said that their profits were hurting by rising costs, sluggish sales, and supply chain disruptions. Shares of Target sank. Okay, and worst one-day performance since Black Monday in 1987. Dollar Tree, Dollar General, Costco, all of them recorded their largest single-day percentage declines in years. Okay, like I said before, I do think that all these companies, they don't really have a pricing power. Okay, they all, as limited of a pricing power that they do have, they have a lot of headwinds, and the headwinds actually include your inflation, your rising fuel costs, your rising wages costs, your rising operational costs, and all these cash burns that's going to be included in creating this sort of business that actually doesn't give you that big of a pricing power. And I think that's kind of the downside of what all these are actually going to be. So, Target basically dropped by 25%. And I just wanted you to understand, for Target to drop 25%, we have never heard of something happen like this before, unless if we're talking about a recession like what we saw back in 2020. So inflation is hitting every aspect of an earnings report, whether it be a transportation side or supply chain disruption. Customers are no longer buying the more expensive items they would typically buy. All this trickles through to an earnings report. And it's kind of obvious, because how we actually look at it is because, for example, if you actually go to Walmart, and usually every single month we basically spend, say, every single month we spend, say, $400 on groceries, for example. Okay, family of five, you might need $400 worth of groceries every single month. Fair. Okay, and the thing is that when you go to Walmart, for example, next month you suddenly think that oh, there are some prices that actually went up. Eggs went up in price. Rice went up in price. Maybe oil went up in price, whatever it is, and then you start to think that instead of rice, maybe we can have just bread. Instead of bread, we can have pasta, or you start to find various different alternatives. And the same for your poultry, the same for your vegetables and things like that. And eventually, you start to see that from a $400 per month, you're actually spending close to $500 a month. And in order for you to actually bring that down a little bit, you're going to find various alternatives to bring it back down to about $400 a month again. So of course, you are going to be sacrificing a little bit of your quality of life and also standard of living to a certain extent, just so that you are actually paying the same exact price for groceries every single month. And that's kind of the issue with all this high inflation that's happening in the market. So over here, you can see that, even Brent crude, the international benchmark for oil, fell. Which is why, like I said before, I'm very, very happy to see oil prices go down. And I do think that, prices of oil needs to go down. Right now, oil prices is still trying to stagnate somewhere in the north of $100. And I don't think that should be the case. We need to bring down oil prices down back to a stable $90 or so per barrel. Okay. And that would be the first step. Because the thing is that if we do not bring the prices of oil down to $90 per barrel and stabilize it there, okay, we're going to have hyperinflated oil prices for everything. It's going to be in your operational costs. It's going to be in your cooking. It's going to be in your logistic costs. Because for people who are delivering stuff, for people who are going to be doing most of the road stuff, all of them need fuel, operational costs. And all this are the reason why I think that oil prices needs to go back down. Of course, it's easier said than done, because of course, if we are able to just manipulate prices of oil, that would be easy, because it's all about supply and demand. So after all, I do think that sad to say, one of my prediction about the whole Russian invasion might sadly become true, due to the fact that because of how this might turn out to be an occupation, the supply and demand for oil, the supply side of things might be way more prolonged than we expected, and the supply will actually kind of be limited for us, whereas the demand is going to continue growing. And of course, as much as a lot of countries are trying to say that they're trying to get out of the dependence on oil, but there's going to be more stories about that, about the ESG and the whole sphere with Elon Musk as well. All right, I don't want to harp too much on this, because there's a lot of news for us to really go through. All right, next up, Target stock sinks 25% on earnings, miss high costs. So I'm just going to go through Target with you guys so that you guys can kind of understand why Target is going through this sort of price drop, and that will most likely be happening with Walmart, Costco, Dollar Tree, and such. But I do want to let you guys understand that there's a huge difference between Target and Walmart, is because Target is more towards a consumer discretionary, whereas Walmart is more towards a consumer necessity. So if Target were to go down by 25%, I completely understand. But for Walmart to drop by 25%, then that's going to be something that's going to be very, very scary. Okay, so of course, I'm just going to open up Walmart just to see how much they actually dropped by. So yeah, okay, so over here, they basically dropped by 6%, and I kind of expected that to be the case, because Walmart is not going to be dropping by 25%. Okay, you have to understand that people who go to Walmart, people are going to be buying the necessity. People who go to Target, on the other hand, they might look for the on-store brand. They might be looking for something that's slightly better in quality, something that have a better brand, something that's being produced by a better company. And those usually have a different margin, and Target used to be able to earn a little bit more from those margins as well. So that's the difference between Target and Walmart, and which is why I said that, Target falling 25%, I totally get. If Walmart, on the other hand, is the one that's dropping 25%, and then I will assure you the recession is going to be imminent. So, all right, so basically you can see, going down. Target management said fuel and freight costs will be $1 billion higher this year than it had expected, with little sign of their easing throughout 2022. So this is huge, okay? Because like I said before, when you're talking about operational costs, you also have to talk about your logistical costs for deliveries and also freight costs. And those are easily $1 billion higher this year than what they expected. And they have already expected it to be higher as it is. So you can kind of understand why oil prices actually play such a big role in the entire world, even though we are talking about wanting to reach towards a greener environment and such. All right, anyway, let's move on to the next one, which is Elon Musk actually going to buy Twitter? Can he just walk away? Okay, so this news basically is talking about how Elon Musk basically went on Twitter and asked Parag Agrawal, which is the ex-CEO of Twitter, saying that, are you sure that the bots are actually being counted or are actually accurate? Because according to earning reports of Twitter, there's only 5% of the entire Twitter sphere that's actually made of bots. And all the other so-called bots accounts are actually being banned every single day. 500,000 accounts are going to be banned every single day. That's what Twitter allegedly said. And of course, Elon Musk is saying that he's just calling out the BS on that because he don't believe that there's only 5% of bots account that's going on Twitter, which evidently so. All of us actually use Twitter to a certain extent, and we understand that bots are definitely not just 5%. Personally, I think that bots are easily 20 to even 30% of the entire Twitter community. And that's going to be a huge issue. Why? Because whatever that was being reported by Twitter, aka the revenue, the ads revenue, is actually based on a 5% bot count. And if bot count is going to be about 20%, then that means the revenue basically just went 4 times lesser. The efficiency of ad revenue is going to go down, and the amount of ad revenue is going to go down. And that's one of the reasons why Twitter is not going to be a good company to get into, which is why Elon Musk basically said, pause, I'm not going to be talking much about buying the Twitter until we solve this bot problem. And that's fair, because the thing is that it's the same thing. It's like, for example, if you're buying, say, a water bottle, okay, for example, a water bottle, and on the inside of the water bottle, we have like filled all the way to like filled with sand, okay, and another water bottle that is filled with water. If you were to buy the bottle of water, okay, it sounds like some tongue twister. If you were to go buy the bottle of water, you're basically buying water. If you're buying the bottle of sand, you're buying sand. And if you're buying Twitter that's filled with bots, you're not buying Twitter, you're buying bots. And that's where the real concern actually comes up for Elon Musk, which is why I think that that's totally fine for him to actually have his own reservation on why Twitter might not be that good of a buy. And of course, this would also bring forth more worries because, for example, it simply means that Twitter hasn't exactly been truthful with their earnings report and all the other subsequent report that they actually have for the past few years. Because let's be honest, bots have not been 5% all this while, and Twitter have always said that it's always been less than 5%. So that's going to be a concern. So right now in this article, they're just saying that, can either side walk away at any time? Not easily, because Elon Musk did have a no cancellation deal or something along that line. I think it was like $14 million or something, or close to $1 billion, if I'm not mistaken. Not easily, both sides signed a merger, blah, blah, blah. For example, he waived the detailed due diligence that buyers typically perform on targets. Think of it as skipping a home inspection, and gave Twitter the right to sue him to follow through with the deal. Both sides are agreed to pay each other $1 billion breakup fee if they cause the deal not to happen for a certain reason. But specific scenarios must unfold for those to become relevant. Also called termination fees and penalties are meant to deter parties from breaking agreements and address the inconvenience and cost of a failed deal. So yeah, $1 billion breakup fee for both sides. So if Elon Musk basically say that he want to break up on this deal, he needs to actually give relevant evidence to say that Twitter is the reason why this deal is not going to work out, and Twitter have to fork out $1 billion. Or if Twitter do whatever that was said, and then Elon have to pay for the $1 billion. So, can Elon Musk just pay Twitter the $1 billion breakup fee to get out of the deal? Not exactly. There are three clear scenarios in which this could happen, and possibly more. If regulators try to block the deal or the debt financing falls through, he will likely have an out. And the third is that he can show Twitter has significantly changed for the worse since the deal was agreed upon under a concept known as material adverse effect. Believed that Twitter accounting of spam accounts was inaccurate when he signed the deal. The lawyers could attempt to litigate the issue in various ways, including as a material adverse effect, or possibly by alleging that Twitter misrepresented information in filings. It's unclear whether they would succeed, though it would open the door to settlement discussion. So, like I said before, so the two thing that was actually being said over here, the first one is that, for example, if the White House or the Biden administration or the SEC basically step out to say, we're not going to allow Elon Musk to buy over Twitter, if any one of them come out to say that, bam, deal is off, and you can possibly fight that, Elon Musk will not have to pay a breakup fee simply because he was actually not allowed to do so, not because he didn't want to do so. And the second thing is basically what I said before, which is because if Elon Musk is saying that the accounting for the spam accounts is actually inaccurate when he was signing the deal, he can basically bring forth that, Twitter actually misrepresented all the information on all the previous filing, and that way they can actually find it out. So yeah, that's basically how Elon Musk can actually get out of this Twitter deal. All right, but anyway, same thing. Let's move on. Russian soldier admits shooting unarmed civilian in first war crime trial in Ukraine. A 21-year-old Russian tank unit officer admitted Wednesday to fatally shooting an unarmed civilian in Ukraine's first war crime trial since Russia's invasion. The invasion came as Finland and Sweden formally applied for NATO membership, and as hundreds more Ukrainian soldiers were evacuated from Mariupol's Azovstal steel plant after laying down their arms and taken as prisoner to Russian-held areas of Ukraine. All right, anyway, I kind of don't want to talk too much about this, simply because we already expected this to happen. As much as we do not want this to happen, this has already been happening. And, we're talking about unarmed civilian being killed in their own countries, which is why we always talk about how, war-torn countries and like war in general is always not going to be a good thing. And it's going to be very, very troublesome for all of us actually. But yeah, hopefully we can actually stop all this, where, unarmed civilians are going to be, they actually stay out of it, where they do not lose extra life to all this invasion, war sort of BS. So I really don't have much to say about this, because I just feel very, very sorry for Ukraine. And of course for those Russian soldiers as well, because some of them, they are just basically brainwashed to think that, Ukraine is the clear enemy. And, but I think that's just kind of how war is usually. So, all right, I'm not going to talk more about this because I think it's very, very depressing. All right, next up, we have China in talks with Russia to buy oil for strategic reserves. And like I said before, thousands and thousands and thousands of times, yet and yet again, okay? I said it before, China is going to buy Russia's oil because it makes sense. And I'm not sure if this is going to happen, okay? But this is my own prediction. China is going to be rebranding Russia's oil and then becoming a new Russia and selling oil to everyone else. They're going to get a discounted oil price from Russia, rebrand it to Chinese oil, and then Chinese oil out to all the other possible clients, be it different countries who wants to get oil, but they do not want unethical oil from Russia. But hey, they have been cleaned by the Chinese sector, so maybe Chinese oil might be more ethical than Russian oil. Beijing is currently in discussion with Moscow to buy additional supplies, according to people with the knowledge of the plan, who asked not to be named as the matter is private. Crude will be used to fill China's strategic petroleum reserve, and talks are being conducted at a government level with little direct involvement from oil companies. Like I said before, and it's not just going to be China, it's going to be India as well. It's going to be countries who are actually been suffering a lot. And I think they're going to take this chance for them to actually get cheap oil. And this is how they can actually just turn themselves around. Because they are expecting that oil is going to be used for the next 50, 60, 70 years. and that's going to be a good time for them to actually do a reversal on their economic progression. All right, anyway, next up we got Sri Lanka. Falls into default for the first time ever. Nation missed a grace period payment on bonds worth $78 million. Asia fastest inflation is forecast to worsen to 40% from 30%. Wow. Ooh. Okay, it's bad. Government struggles to halt an economic meltdown that prompted mass protests and a political crisis. But yeah, I didn't know about the whole Sri Lanka missing the bond coupon. We read that, I think, about 3 weeks ago, but the default wasn't going to be happening because we expected China to do some sort of a bailout. Clearly that wasn't supposed to be. That's not the case anymore. So yeah, they finally default for the first time ever, and that's going to be very, very troubling because you're going to see more third world country start to default, one country after another, and slowly you're going to see developing countries default one after another as well. So it's kind of like monopolizing, but on a grander scale, where you're not talking about companies, you're just talking about countries. So yeah, it's going to be a little bit dangerous. But clearly, we're definitely going to be talking about recession a lot more in the next few months and such. All right, next up, we got Grab revenue rises, a loss and narrows on delivery ride demand. All right, so I just want to give you guys a brief understanding of my own perspective on Grab. Okay, I've always said it before. I do not like Grab as a company, but I love their product. Why? Because I'm a Singaporean. I use their ride-hailing app. I use their food app. I don't really use their insurance app. I don't really use their financial service app. But I do use their products, okay? I use their layaway model, which is their buy now, pay later, okay? I use a lot of their products, but I'm not a fan of their company. Why? Because you just read the earnings report and it just doesn't make sense. Ride-hailing is basically a loss leader, okay? And everything else is trying to just make up for the loss leader effect. Okay, of course, with the food and the delivery side of things, they're really trying their best to earn a lot of money, which is where most of the revenue actually comes from. Financial sector is going to maybe make up of 3% of their revenue. And, all their other services is going to make up about 1 to 2% of their other revenue. So most of their revenue loss is actually coming from the ride hailing, which is what I said before that I don't like Grab. So I'm just going to look at how much Grab is at the moment. I'm pretty sure I have it somewhere in here. Grab right now is about $2.60 or so. I talked about Grab and I said to short Grab at $20 when they were still at Altimeter Growth, when they were still via a SPAC company, and then they changed the name. At $20, I said it before, short Grab. Grab is not a good company. Like I've said it over and over again. The only reason why I didn't do so is because I was really having most of my capital in other investments, which I really regret. Because all the other investment I'm not going to be doing as well as me shorting Grab. So yeah. Oh well, you cannot regret these kind of things. All right, so you see Grab Holdings revenue rose 6% in the first quarter after ride-hailing and delivery company won back consumer as the pandemic receded in Southeast Asia. The revenue increased to $228 million after the Singapore-based company added sales from Jaya Grocer, a platform it acquired in January, and more than $139.2 million analysts were expecting, according to the data compiled by Bloomberg. Grab's net loss narrowed to $435 million, and that's the situation here. You can see that the revenue increased to $228 million. Sound fantastic, but the net loss still is at $435 million. So definitely some red flags over here. Okay, some red flags over here. Managed to grow paying customer 10% to $30.9 million after Southeast Asia country removed pandemic era restriction. Per user spending climbed 19%. It said, unlike other internet companies that are grappling with cooling post-COVID online activities, Grab's car hailing and delivery businesses benefit as life return to normal. And it's the same thing, okay? Even if everything is going back to normal again and you're still losing that much money, I said it before and I'm going to say it again. Companies who are losing money in this current market cycle is going to die. No one in their right mind is investing into companies who are losing money. Okay, everyone is investing money into companies who are already in profit or made profit before and basically just had a little bit of a loss, or just in pure profits. You're not going to be seeing a lot of people being 100% bullish, 100% convicted in companies who are not making money. And that's my only take against Grab. Okay, I love Grab, don't get me wrong. I love their products. I use their product. I support their products, but I'm not going to be investing in Grab. All right, enough about Grab. Moving on. Okay, honestly speaking, I just thought that this was quite interesting because, like, I like K-pop, and I just looking at this, it made me want to click it. K-pop group NCT Dream lure 1 million customers for Alo Bank. Apparently, this is an Indonesian bank. Alo Bank is to launch app at music festival featuring Red Velvet, Bukalapak, Salim Group among backers of the digital lender. So there's a new app for them to attend shows by some K-pop groups under SM Entertainment, most likely. The PT Alo Bank Indonesia, which had just 200,000 clients in January, is banking on the music festival starting this Friday to officially launch its app and boost its adoption. So I just thought it's kind of cool. They're actually doing something like that. So that's why I clicked it. Honestly, not really something super duper interesting. All right, anyway, let's move on to Jack Dorsey outlines Block Bitcoin-centric future. At first investor day in 5 years, no longer just a payments company. So of course, Jack Dorsey is the CEO of Block, or previously known as Square. Block's first investor day since 2017. Executives describe how crypto and music streaming businesses make up an ecosystem behind the original card reader. The future of Block, formerly known as Square, will also be focused on CEO Jack Dorsey's long-term belief in cryptocurrency Bitcoin. Calling Block a payments company is like calling Amazon a bookseller. We've grown in so many different ways across multiple dimensions. And for people who are unaware, Block basically created Cash App, and that was one of the reasons why Square became so widely known for the payment app that they actually did that took United States and a lot of other countries by storm. But yeah, of course, right now they are trying their best to actually get out from the whole payment side of things. And for Jack Dorsey himself, he's someone who's very, very bullish in cryptocurrency, and we all know about it as well, alongside with Elon Musk and also Cathie Woods. There's the famous gathering of the three of them talking about Bitcoin's future as well. So it's interesting for him to actually talk a little bit more about Bitcoin as such. The evolution of Block and Bitcoin role in it moving forward. It's difficult to fit a company like Block into a single category. We're no longer just a payments company. A lot has changed since our last investor day. So, of course, I do expect more to change in Block, simply because Jack Dorsey was actually the founder and CEO of Twitter, alongside with Square, and after which he basically had to choose one or the other, and he basically let go of Twitter and moved over to Block to become the long-term CEO. So yeah, I'm very, very interested to see what he would have for Block, but this was basically just him talking about how Block is better, and in 5 years, Block is gonna be doing so much more. But same thing, like I said before, same thing with Grab. You're not making money, I don't care. All right, so moving on. Wow, okay, this is great. Goldman Sachs CEO advises clients to be cautious because Fed policy has unpredictable consequences. All right, so when I was on my vacation, I actually did not have time to go through what Jerome Powell said. So I'm not sure about the new unpredictable consequences. And today, because I literally touched down yesterday night, and I was really, really tired. I was catching up on a lot of my mails and such. And today morning, I basically had to work a proper 10-hour day, almost 11-hour day. And I just got home and just wanted to get through with this. Later on, I will be going through all those speeches, filings, interviews that I missed in the past 6 days. I'm not sure if I will be making any sort of content to actually give back to this. But I do have some videos that I already planned out when I was on vacation, something that actually struck me that I thought that I should kind of do for my Saturday and Wednesday video. But yeah, anyway, Those are going to be coming out very, very soon. I'll see how it goes. But anyway, I'm not sure what Jerome Powell basically said. But yes, Fed policy has unpredictable consequences. And even if Goldman Sachs CEO is telling us to be cautious, I'm just saying, the stars are starting to align. Okay, the stars are starting to align. If banks CEO are starting to tell their clients, be cautious. Okay, mortgage rates might be going up, interest rates might be going up. Okay, we might have a rug pull by the Feds. Okay, we might be Paul Volcker. Okay, it could all be happening very, very soon. So a recession might evidently be not too far away. So we'll see how it goes. All right, next up, we got EV batteries. Cost could spike 22% by 2026 as raw material shortages drag on. And I think that this was actually quite obvious because this was actually reported by NIO, was reported by Lucid, was reported by Rivian. Okay, it wasn't reported by Tesla simply because Tesla actually have everything in built. They build everything in their own factory down to the batteries and such, which is their 4628 lithium ion batteries. So for EV battery costs spiking up by 22% by 2026 as raw material shortage drag on, I do think that that's going to be happening for a lot of EV companies. And I do think that that's going to be a huge thing because there are so many EV companies right now in the market, and especially for those who are listed. Okay, we're talking about NIO, we're talking about Lucid, we're talking about Rivian, we're talking about Akimoto, we're talking about Arrival. Okay, we're talking about all these different EV companies out there, and they're gonna suddenly get a shock of their life because when they start to mimic one of the best EV creator that we have, aka Tesla. Okay, they're gonna start to see that EV might not be that easy for them to actually touch on. So we have to actually see how that would actually go into as well. So I just want to say that this is not coming as a surprise to any of us. Let's be honest. I even covered in one of the news where Rivian actually said that EV battery cost is gonna be spiking up in the next few years to come. So yeah, the spike is result of the scarcity in key raw material needed to make EV batteries, and I'm guessing it is lithium and what's the other commodity that I can't suddenly think of? Yeah, I can't think of the other commodity. Yeah. What is it? Yeah, okay, lithium, like I said. I'm pretty sure there's another thing, isn't there? Just lithium? Okay, well, I guess it's lithium only. I was right somehow. All right, anyway, next up we have Amazon announcing a new $60 tablet. And I do think that, I just want to say this first, I do think that this is a very, very bullish thing for Amazon. Because first things first, I always say that I do not like Amazon because I think that they are not innovating anymore. And for them to create something new, finally, shows some form of an innovation. So I do think that this might start to have a little bit of a bullish connotation behind it. Although I'm not going to instantly just buy into Amazon because they are actually announcing a new tablet. I'm going to be looking at the reviews and I'm going to see do they have any roadmap of more innovation to come. Because as of now, basically Amazon is just depending mostly on AWS, which is the Amazon Web Services for most of their revenue, and everything else is basically just lost leaders and such. So I do think that Amazon, if they do start to innovate again, I do feel that I would have more confidence in investing in Amazon again. But until then, I'm not saying that I'm bearish on Amazon, but I'm just very, very, very neutral on Amazon. So yeah, next up. Facebook IPO 10 years later, new name, same CEO, and a familiar problem. Facebook held its NASDAQ debut 10 years ago on May 18. Remains the largest tech IPO for a US company and third biggest across all sectors behind only Visa and General Motors. Stock price is 47 off its high from September as investors question the company's investment in the metaverse. And like I said before, I always said that Facebook's investment into the metaverse, I don't think that was the smartest call that they could have done. But ultimately, I do think that they really didn't really have much chance to do so. And I think that it was really make it or break it. And they are only gonna be they're gonna be called crazy until we call them a genius. Okay. We're not sure if Meta Platform is going to be the one that actually get the first breakthrough for metaverse, or is it going to be Apple, or is it going to be Google, or is it going to be just some random company that is currently in a garage developing? But whatever it is, metaverse is going to be conquered one way or the other. And I'm not sure if Facebook is actually doing the right thing by investing so much money into the metaverse R&D. So hopefully there's going to be some sort of fruition from the amount of R&D that's being put into the metaverse by Facebook Meta platforms, and hopefully we might actually see some form of a results coming from the metaverse as well. Okay, anyway, next up. Okay, wow, Gary Gensler. All right, let's talk about Gary Gensler. All right, Gary Gensler, honestly, after what happened with Terra Luna and what happened with stablecoins and what happened with the current crypto fall, I do think that Gary Gensler is definitely going to be talking more about regulatory talks, especially surrounding cryptocurrency. And I do think that there's going to be a lot of regulatory. You know what? Actually, I really wanted to make this into a Saturday video about the regulatory talk. So you know what? I'm just going to save this for Saturday instead. I really want to talk a lot about this because I think that this is very, very interesting, and I think that people need to really understand the concept behind what I'm going to be talking about on Saturday. So stay tuned for that video. All right. Anyway, I'm going to move on to the next one. Which is okay. Bitcoin production roars back in China despite Beijing's ban on crypto mining. Nothing crazy about it. I think that China has always been very, very bearish about Bitcoin mining, Bitcoin everything actually. So I don't think that that's gonna serve as too big of a surprise for any of us. All right. Anyway, before we actually end today's thing, I do want to talk a little bit more about what happened with Elon Musk, which is. Let's see, can I find it? Can I get Elon Musk out here? Gosh, this is so hard to get Elon Musk out here. Okay. All right, let's look at Elon Musk's tweet and replies. Come on. All right, so for those who do not know about this, I'm just going to open up from this link because it's easier that way. Bam! Tesla has been kicked out of the S&P 500 ESG index. And for people who do not know what the ESG index, basically it is an index of the 500 companies who kind of promote safe energy usage and such. And basically, Tesla lost its spot on the ESG version of the S&P 500 index, which is utterly stupid, and I'm dumbfounded, and it's just ridiculous because I don't know why. Like, okay, you know what? I'm not sure if we are able to actually see who's inside. Oh, okay, great. We can. Here you go. Okay. We got Apple. We got Microsoft. We got Amazon. Okay. We got Alphabet ANC. We got United Health, Nvidia, ExxonMobil. What? ExxonMobil is for clean energy? No way. And Tesla is not. Like, just what is going on? I was so confused when I was looking at the index for this, and I'm like, come on. Like, if you were to add in anyone else other than ExxonMobil, I'll be completely fine with it. Okay, like if you want to say that Tesla is not for clean energy, okay, do what you want. ExxonMobil, come on, like. Man, I don't know. And then afterwards, of course, Kathy was basically just, ridiculous, not worthy of any other response. And Elon Musk basically said, yep, a clear case of whack division. So, of course, afterwards, Elon Musk, this is going to be a little bit funny. Elon Musk basically showed that, okay, what I love most about Whacktivists is their incredible sense of humor. Okay. It makes sense why Elon Musk doesn't want to vote for Democrats. So Biden doesn't invite Tesla to EV Summit. While Tesla being the largest EV manufacturer, AOC, Warren, most likely going to be Elizabeth Warren, Bernie Sanders say that Elon doesn't pay taxes, whereas in 2021 he paid $11 billion in taxes. Hate mongering against Elon is crazy. And like I said, okay, so this was actually brought up because of a tweet that Elon tweeted out. Oh, okay, it's actually below. Never mind. Let me just bring it up. Exxon is rated top 10 best in the world for environment, social, and governance. while Tesla didn't make the list. You know, ESG is a scam. It has been weaponized by phony social justice warriors. Let me see if I can zoom this in for you guys. All right, so let's move on down. 5 oil and gas companies were added to the S&P 500 when Tesla is removed. You know, you got your Marathon Oil, you got your Phillips 66, Valero, Bakers, and EOG. Like, come on, man, insane. Okay, can we get? Oh my God, it's so huge. Okay, let's see, Elon. Let me just get back to. Okay. Or do we not get anymore? Okay. All right. So afterwards, basically, Elon Musk said that he's not going to be voting for the Democrats anymore because I'm not sure why can I not find. Oh, okay. Never mind. He pinned it. No wonder. Okay. In the past, I voted Democrat because they were mostly the kindness party. Okay. But they have become the party of division and hate, so I can no longer support them and I will vote Republican. Now watch their dirty tricks campaign against me unfold. And yeah, like I said before, okay, honestly, the thing is that it doesn't really matter to me for if I'm Republican or I'm Democrat simply because I'm Singaporean. I don't have to care about which party I am. But if I am in the United States, I believe that I'll be leaning more towards the Republican side. However, I'm like 51-49. Because I do understand where the Democrats are actually coming from. I just believe that the Republicans have the more correct ideology. Okay, so political attacks on me will escalate dramatically in the coming months. And it kind of, like I said, honestly, I think that this guy actually, like, he summarized it really, really well. It makes sense why Elon Musk doesn't want to vote for the Democrats. Biden doesn't invite Tesla to EV summits. And despite not just inviting Tesla to the EV summit, Biden says that General Motors and Ford Motors are the leaders in the EV sector. Come on, Biden. Come on, Biden. Come on. All right. And then afterwards, AOC, a Democrat, Elizabeth Warren, a Democrat, Bernie Sanders, a Democrat, is saying that Elon Musk, the richest man on earth, is not paying taxes. But he paid $11 billion in taxes. But Elon Musk is not paying taxes. Like, come on, man. Oh my God. I don't know, man. If I'm Elon Musk, I'll be pissed too. I'll be pissed as hell. Paying so much taxes and still people are still hating on him because he owns a successful company. I don't know. Just horrible. But yeah, the news is basically on the ESG thing and also Elon Musk going to be part of the Republican side of things. So yeah, just those are the news. All right, a very, very long news day. 48 minutes. God damn. Okay, buddy. That's all I have for today. Hopefully later on in the market, we're going to start to see a little bit more good news happening. I do hope that the bad news actually comes so I can get out of some of my covered call position first. But anyway, that's all I do have. Right now it's about 9:20. So this might be a good time for me to quickly upload this and then take a shower and then get back to market open. Anyway, thank you guys so much for watching, and I'll see you guys tomorrow.